In the world of investing, there's this quiet revolution happening. It's a massive shift that's totally changing how millions of people are building their wealth. And it all boils down to just 3 letters: ETF. So, what is going on here? Why are so many people, from total beginners to seasoned pros, moving their money into ETFs? It's not just hype, believe me. There's some really powerful, really solid reasons behind it, and we're going to break them all down one by one.
So to really get a handle on just how big this takeover is, you have to see the numbers. And honestly, the growth is absolutely staggering.
Think about this. Just 10 years ago, ETFs were kind of a small corner of the investment world. But today, well, according to the 2024 SEMA Investment Funds Report, assets in Canadian ETFs have exploded by more than 7 times. That's not just growth, that is a seismic shift. So what is this thing that's pulling in all that cash?
Okay, to really understand the appeal here, we first have to get crystal clear on what an ETF actually is.
All right, so an ETF, or an exchange-traded fund, is kind of a hybrid. On one hand, it's a fund, right? It's like a basket that holds dozens, maybe even hundreds of different investments, stocks, bonds, you name it. But, and this is the key part, it's exchange-traded. That just means you can buy or sell that entire basket on the stock market with a single click, just like you would a single share of stock. And that simple combination is what makes it so incredibly powerful.
BlackRock has a perfect analogy for this. They say an ETF is like a sports team. Instead of betting all your money on one star player who could have an off day, you're investing in the success of the whole team together. That built-in diversification is one of the main reasons ETFs are so popular for managing risk. It just makes sense.
Now, to really get why ETFs are taking over, we have to put them in the ring with the longtime champion of investing, the mutual fund. Let's see how they stack up on the 3 things that matter most to you, the investor.
First up, cost. And this is probably the biggest one. Because of how they're built, ETFs just have way lower fees, typically. In fact, BlackRock points out that some ETFs cost just 1/10 of what the average mutual fund charges. Now, that might sound like a small difference, but over decades of investing, that can mean tens of thousands of dollars more in your pocket, not someone else's. Next up, flexibility. If you want to buy or sell a mutual fund, you're stuck doing it just once a day at whatever price is set when the market closes. But with an ETF, you can trade it anytime the market is open, just like a stock. That gives you so much more control over your money. And finally, transparency. This one's huge. With an ETF, you know exactly what you own every single day. The providers have to show you what's inside the fund. Mutual funds, on the other hand, well, they might only show you what they're holding a few times a year. So if you're an investor who wants clarity and no surprises, ETFs are the obvious winner. Okay, so they're cheaper, they're more flexible, and they're way more transparent. But the real game changer here is just how massive the ETF universe is. I mean, what can you invest in? A better question is, what can't you invest in?
Seriously, the variety is what gives you all the power. You want to invest in the entire US stock market? Bam, there's an S&P 500 ETF for that. You think the future is in AI? You can buy a tech sector ETF. You want to protect yourself with some gold or maybe add the stability of bonds? Yep, there are ETFs for those too. You can build a super customized, super diversified portfolio with just a few clicks. It's incredible.
All right, we have covered a lot of ground here. So let's just boil this all down to the single most important takeaway for you. So why the big switch? It really comes down to these 3 simple but powerful advantages. People are choosing ETFs because they want to keep more of their money with lower costs, they want to control their own strategy with greater flexibility, and they want to invest with confidence because of that full transparency. It really is a huge shift toward a smarter, more modern way to invest. Look, this isn't just some passing trend. It's a fundamental change in how people are going to build wealth from now on. And that leaves us with one last really important question you should ask yourself. Is your portfolio built for the future of investing?